Hi. So we are here today to have conversation on a very important topic. This is being spoken about, I would say, everywhere, on social media, in news headlines, right, and even in our day-to-day conversation. In fact, this topic is also spoken in context of India, whether Indians will be ready for that phase. Yes, the topic I'm referring to is retirement. Well, when it comes to retirement, everyone has their own dreams and aspirations about retirement, but the conversation around retirement is heating up. So I'm Tuljan Satarkar, and today we have with us our Chief Investment Officer Manish Kumar, who has joined us to have this insightful and engaging conversation on retirement. So Manish, thank you so much for joining us today. So Manish, to begin, as I said, there's so much conversation happening around retirement, right? What do you think is triggering this today?
Thank you, Tuljan. Yes, you are absolutely right. Lot of conversations around retirement, and rightly so. Most of us are aware that India has got a large young population. Yeah. We are aware we are a young demographics. But what people don't realize is we are also a very fast aging country. So while we have a very sizable young population, they are also going to age very fast. And it is only a matter of time when a very large number of people will actually be coming very close to retirement in the next 20 to 30 years. So that is one aspect we need to bear in mind as a country. Second, people are living longer. Healthcare facilities have improved.
Yeah, it's true. Absolutely.
And lakhs of people above the age of 100 years. And it is only a matter of time when more and more of us will be looking forward to living longer.
Oh, that's interesting.
Yeah. And while it sounds very good, all of us would want to live longer, yet at the same time, it is important that we plan our lives better so that we can enjoy our long life.
See, unlike probably few years back, people retired, because at that time, the working population was primarily into, a government sector. And most of the people who probably retired 2 or 3 decades back, okay, there was a pension, right? Yeah. But that's not going to happen, right? Because now if you look at our working population, most of them are in private sector. And that makes it just more important, for I think all of us, okay, to think, about those, that I would say long duration of retirement and plan better for it. Yeah,
absolutely.
Manish, another interesting thing is today if you look at, the various generations, right? Okay, you have Gen Zs, you have Gen X, right? Today if you look at Gen Z, they look out towards life it's so different. Yeah, for them it's all about living in the moment, right? And probably Gen X is very different. So have you seen, in terms of how these different generations, okay, do they look at retirement differently?
No, you are absolutely right. First of all, today more and more people are getting employed in the private sector, and therefore it is important to take retirement seriously, given that we are likely to live long. And you are absolutely right that across generations, the value systems are very different. Yes. So for example, people in my generation, we look forward to a very stable and balanced life even after retirement. There is a certain way in which I am used to living currently. I would like to maintain my living standards even after my retirement. If you look at the millennials, they are currently focused on building assets for themselves, buying a house, planning weddings for their children, or securing the children's future in terms of higher education and things like that. So the priorities are different right now. And sometimes when you focus so much on these priorities, retirement planning actually gets pushed down. And then you have got Gen Z, where the concepts are very different. You are basically living the moment. But while they are living the moment, it's not they're not responsible. The concept is basically, there's something called FIRE. It's something that is being used by this generation, where they are seeking to achieve financial independence early, and at the same time you want to retire early. Yeah. Now this sounds very good. All of us would want to get rich fast. All of us would want to be financially independent, but it's easiest said than done.
So agree with you. If you look at these three, I would say 4 generations, right? Yes, for Gen Z it's all about FIRE. It's about moving off the treadmill as early as possible, right? If you look at people in let's say early 40s, as you rightly said, because it's a sandwich generation, there's so many other goals. When it comes to early 50s, it's about maintaining the lifestyle, and those people who are like retired on nearing retirement, I think for them it's all about being independent. Because at the end, I think the most important thing is after being independent throughout the life, okay, even those 2-3 decades of retirement, years, one would like to continue to be independent, and not depend on anyone. But do you think it's realistic for someone, okay, to have enough savings to live the retired life the way they desire?
I would think so. All one needs is to be able to plan well in advance. Okay. And I think, let me try and give you some examples to what I'm trying to say. So you are right that most of us are so absorbed in our day-to-day living that we don't think too much about retirement because it is so many years away. Let's live life as it is today, right? And that's the approach, and there is nothing wrong with that. Only thing is that if you do not plan and start early, it becomes that much more cumbersome later on. Okay. So all you need to do is you focus on, okay, if you are earning a certain level of income, how much your likely regular expenses are going to be, and you start saving a bit every month and every year as early as possible. And let me give you one example. Let us say you start planning for retirement and you start saving 1 lakh every year for next 30 years, and this is starting at the age of 30, let's say. That is going to earn 10% per annum. This 1 lakh of saving per year over 30 years, compounding at 10% per annum, will give you 1.25 crores at the age of 60. So it looks small. 1 lakh today per year is not a very big amount of money.
It's true.
But you are ending with a corpus of 1.25 crores.
So that's the power of starting early. And it's so important for one to start early.
So you are asking that, is it difficult? According to me, it is not difficult. All you need to do is you need to start early, and even if it is a small, so be it. Okay. Now let me give you another example. Suppose you are too engrossed in day-to-day living and you think right now you are not really in a hurry to plan for retirement, but you said, okay, I will start doing that at the age of 40 years. Now there is nothing wrong in that as well. But just look at the kind of impact it will have. If you start at the age of 40 years, and let us say you are still aspiring to reach a corpus of 1.25 crores, the annual investment will go up to 2.4 lakhs. So that is the kind of difference.
So it's a huge impact in terms of India.
Yes.
And I think as you move up in different life stages, okay, you have your commitments go up, right? And it becomes that much more difficult for someone to save money, okay, for these kind of long-term requirements.
Absolutely. And hence the importance of starting early, being regular, albeit small, doesn't matter, because that way you are able to enjoy living during the entire work life.
But Manish, when it comes to, like for example, we plan for different goals, right? Whether it's child's education, whether it's buying a house, okay, or whether it's even, let's say for example, international holidays. And as we said, when it comes to retirement, it's not an event, okay, it's a lifespan of 20 to 30 years, right? So when it comes to planning for retirement and planning for other goals, right, is there a difference? Is there something one needs to look at differently when it comes to retirement planning?
Yeah. I think there's quite a bit of difference between planning for retirement versus what you're planning for other goals. So most of the goals that we mentioned just now, you spoke about
house and
education and travel. These are all event specific. So you buy a house, it is happening at a certain point in time, and it has happened. You're planning to travel, you travel, and that has happened. These are events at a point in time. Typically, what do you need? You need a certain amount of corpus to be able to do that. And if you do not have enough, you borrow and you repay back. That is how it happens, right? But when it comes to retirement planning, it is not actually a one-time event. It actually spans a life. It is spanning across 30 to 40 years after your active work life. So it is not something which is happening at a point in time. It's a long duration. Okay. Second important difference is all of these goals that you mentioned just now. These are something that you are normally trying to achieve when you are having an active work life.
Correct.
Which means you can rely on a regular source of income. So there are times when environment may go up and down, markets may go up and down, and yet you have an active source of income and you can rely on that. And therefore you can plan for these things. Post-retirement, you are not having any active source of income.
Yeah.
And one needs to be cognizant of that. Therefore, it is very different in that sense. Hence, the need to take retirement more seriously. Also, and this is something which I mentioned in my opening remarks, we are actually likely to be living longer. All of us are scared of death.
Yeah.
Unfortunately, we do not realize that very long life also can be scary if we do not plan our security properly. Security, I mean financial security, health security, and so forth.
In fact, just to break it down for the audience,
Yeah.
that what are those 4 or 5 key steps one should take to arrive at how much corpus one requires, and then be able to plan towards it.
So, what is an ideal situation? An ideal situation is a situation wherein the way I am leading my life now,
Yeah.
during my active work life, I would want to lead my life just like that, even beyond my work life.
Sure.
You may retire from work, but you wish to still enjoy life, right? Now, to be able to do that, first of all, you need to figure out how much you are spending regularly right now, okay? And whatever your monthly expenses are, now you know that those are the kind of expenses which you would be possibly incurring even post-retirement, maybe a bit here and there, right? And then you top inflation. You basically allow for inflation pressures which will be there during the course of your active work life. And then you work backwards and see what is the kind of corpus you need to be able to support that kind of monthly or annual expenses. And then you also need to build onto that the fact that there is an element of inflation and the value of rupees continuously eroding. People do not realize that over a period of 30 to 40 years, and I'm giving a wide range, the value of rupee can actually erode by almost 90%, which means if you think that you're retiring with an annual income of, let's say, 1 lakh or 2 lakh rupees, the value of that money will go down by 90% in a matter of just 30 years if inflation remains where it is today.
That's massive.
That's a huge
Massive.
erosion in terms of, so what happens is that when you are looking at your current income, you think it is good enough for your retirement. But when inflation starts hitting you, you realize that the current income is just not sufficient. And that is why it is important to plan for it, and in a manner that not only you are able to take care of immediate needs after retirement, you are also able to take care of the fact that your needs will grow beyond retirement because of inflation. Nowadays, people are actually working more and more in the private sector. Even those who are working in the government, not all of them have access to pensions, right? So what happens is, like, my father retired in 1992. Of course, he's no longer there, but his monthly pension at that point was just about 5,000 rupees. That was his monthly pension. Today, my mother alone. So what happens is, when the person dies, then his spouse gets 50% of the pension, right? My mother alone is getting more than 60,000 rupees per month. So that is the kind of jump she has seen because of the fact that the government has chosen to compensate her for inflation. Which means if my father had been alive, he would have been getting over 1.2 lakhs of pension, which had started at 5,000 rupees in 1992. So just imagine, and this is merely a compensation for erosion in the value of money over I would say 33 years.
So much going forward, it's also important to create different, corpus, break it into different parts. For medical, okay, let's say for hobbies and for regular income, So I think that's also one thing one should very consciously work towards, right?
So that's what financial planning is all about. So effectively, when you're doing any financial planning, you are looking to ensure that you have a certain good life right now as you are living. You plan for these one-time goals or event-based goals, and then you plan for retirement. So retirement planning has to be an integral part of overall financial planning for every household. We have seen that people who actually look at passive savings and hoping that it will be sufficient for retirement, they are normally well off in the initial years after retirement. But if you have not planned for it adequately, you start suffering in the later years. What this would entail is that I'm about to retire. Not only I should be able to have access to some kind of monthly cash flows which can take care of my immediate needs, I also should be able to build adequate wealth which can continue to grow and take care of needs in the later stages of my life. So it's important to do that as well.
So Manish, if we go back, okay, last, let's say, couple of decades, right? I think we have seen a lot of probably unexpected events, right? Whether it was 2008 crash or whether it was, COVID, which happened. So is there something, to learn from the past when it comes to planning for, I would say, future for retirement?
While our markets have done well for most of the time periods, there have been phases when we have seen very sharp corrections. So one such year was 2008 meltdown, and that was probably one of the toughest years of my career, right? And markets have been falling, and no rules of valuations were working at that point in time. Likewise, when COVID happened, this was something none of us had actually seen, right? And it was one of its kind of event, right? So these aberrations, first of all, can make things very tricky in your overall financial planning exercise. And in case you are banking on wealth at those points in time, then it can get little challenging, right? So it is important that we plan for wealth creation. It is important that we plan for some annual or month or some regular income for a prolonged period of time, right? So in that context, I think it is important to look at solutions which are meant for these purposes.
Okay, because today if you look at people, right, they have different, they invest in different kind of investment products, right? So in this entire, mix of, portfolio, right, is there something one needs to consider very, very cautiously or consciously in terms of, adding different kinds of solutions?
Yes, of course. So first of all, if they're continuing to invest in some of the products that you mentioned, I think they should continue to do that. There's nothing wrong in that. But it's important to look at some of the specific retirement-oriented solutions.
Okay.
Why I say that? Because there are phases when even equity markets can be very tricky if you're relying completely on that.
Okay.
Likewise, if you're relying on, let us say, investing in some deposits and you think that you can keep reinvesting that and you can keep earning a secured income on a regular basis. In Indian context, we have seen deposit rates fluctuate between say 5% and even 10%, say 3 decades back.
Yeah, true.
Right?
True.
Even now, majority of them, they put money in certain kinds of interest-bearing deposits.
Yeah.
And whatever interest they earn, they actually lead lives basis that. Now, imagine if those rates, which right now are at around 6.5%, were to go down to 2-3%. How would your life look like?
That's a huge impact. That's a
Yes.
huge impact.
Right.
That's a huge impact.
Right.
Yeah.
Now, what retirement products will do is, it will ensure that if you are choosing your products carefully, you'll be able to maintain your earnings rate at whatever yields you have blocked your investments. Likewise, you can also plan for wealth creation in a manner that when you retire, you are able to fulfill both your objectives. What are typically two objectives when you are retiring? You would want to have a good corpus which will give you a mental peace,
Correct.
peace of mind,
Correct.
and also adequate financial security, which is what wealth creation will do for you. And at the same time, you would like to secure stable cash flows which is not linked to any interest rate movement in the country.
Yeah.
Right.
True.
And that is where it is important to start looking at retirement products explicitly.
Yeah. So what you're saying is, there is one phase where one needs to accumulate
Yes.
money, right?
Yes.
And then there's a second phase, okay, where it's all about getting regular income, right? And what we're saying is that retirement products are the only one because they're specially designed,
Right.
okay, to offer this as a solution to people.
Yeah, absolutely.
Yeah. So Manish, just taking this conversation forward, right? Coming to ICICI Prudential Life Insurance, if you can just probably help our audience know how can ICICI Prudential Life, help them in this entire journey?
So, first of all, I think ICICI Prudential Life provides a very wide range of solutions for retirement. Okay, and when I say wide range, it is covering both your wealth creation needs as well as your assured income needs. Right now, for wealth creation, I think those who have invested with us in the past, they know that ULIP is a very fantastic product, and they have been investing with us on ULIPs. Right now, while we have products like Signature and Platinum there, we also have a pension product on the Signature platform. The main difference is, and it's a very beautiful difference, so let me spend some time here, that in a pension product, for whatever is the amount of investment you make, you actually enjoy a tax-free return on that.
Okay.
A tax-free accumulation on any amount of investment that you make is something which no other investment avenue in this country offers. Okay, and then what happens is, when you're investing in a pension product, the expectation is that you will continue to invest till around retirement. Of course, you have the option to continue beyond retirement as well.
Okay.
Okay, or you can choose to little bit withdraw before retirement. But when you are taking out that money, which you have enjoyed by way of completely tax-free accumulation, 60% can be taken out completely tax-free in your hand, and the balance 40% can be used to buy an annuity. Okay. So what it does is, you are eventually left with a certain corpus, and you choose to withdraw that corpus around retirement, can be beyond retirement as well, and that is fulfilling the need of wealth creation. And then you also have the second part, that 40%, which is going into buying an annuity. So during the course of the entire journey, and I'm repeating here for the benefit of the audience, irrespective of the quantum of investment, you enjoy a tax-free wealth creation.
Oh, so there is
during the course
so there is no
years.
Upper limit or limit to that. Oh,
Yes.
that's fantastic.
So you may choose to invest 5 lakhs per year. I may choose to invest 10 lakhs per year.
Okay.
Somebody can choose to invest 1 crore per year.
Oh.
Whatever be the investment amount, it enjoys a tax-free accumulation in a pension product, but with the conditionality that only 60% can be taken out tax-free, and the balance 40% you will have to buy annuity.
Okay.
Now, what effectively it is doing is, it is allowing your money to multiply faster in the more tax efficient manner. So you are left with a higher corpus at the end of the day, and there is an effective lock-in. Okay. Now, I am using this word because I feel that many of us, we want visibility on liquidity.
Correct.
Right. I believe lock-in is a virtue. I believe that if you invest and just stay put, your money actually multiplies better and faster, because it is continuously working. Even some of these features which people may not necessarily be very comfortable with, I would say take it as a virtue, because if money in hand is money spent. That's the way I look at it.
But Manish, you touched upon the market-linked products for accumulation of wealth, right? You spoke about Signature, Platinum, and Signature Pension. But are there non-market-linked products also available if one wants to choose that?
So we have a wonderful product here. It's called Gold Pension Savings.
Okay.
So it's a non-market-linked product.
Okay.
So in a market-linked product, and for the benefit of the audience, what effectively happens is, when you are investing in a product, you are actually investing in an underlying fund. The choice is made by the investor there. So you are making the choice as an investor, and whatever the market returns for you, that is actually passed on to you as a benefit. In a gold pension savings, which is not a market-linked product, there is a kind of a bonus which is being accumulated every year, and then the benefit flows the way it flows in a unit-linked product. But basically, it is a kind of a regular bonus which keeps getting accrued to you. So there are all kinds of people in any society. There are people who are willing to take more risks, and they are comfortable with market-linked products. And there are people who do not have appetite for very high risk, and they want to invest in a product where you are getting stable returns. So for people with moderate risk appetite, gold pension savings is a good one to look at. And both of these would fulfill your wealth creation objective. So this is one part of the retirement plan.
So, Umesh, another important thing, which I've heard, which is the, waiver of premium, and I don't think so. There's any other, instrument or any other, industry which offers this, right? How important is this, from retirement planning point of view?
Extremely important. I would say very critical. And most of us, we do not recognize the value of that. We do not factor in the fact that out of millions of us, some of us will die in the course of this journey. Some of us can have discontinuities in our lives.
True.
What waiver of premium does is, even if you are not there, the company will continue to pay on behalf of the policyholder, and the benefits will actually continue to accrue to the beneficiary, who could be your spouse or anybody in the family. So in a way, it is providing complete financial security to the family, whether you are there or you are not there. This is a feature not offered by any other industry in the country.
Yeah, it's so important, because at the beginning when we spoke, retirement planning is eventually planning about, not individual, but,
Yes.
Also for the spouse, right? I think this definitely would have helped our audience to understand in terms of, from accumulation point of view, the solutions what we have.
Sure.
The second phase, what you spoke about, is the income phase. So I request, if you can just probably, speak a bit on what kind of solutions we have, which the customers can choose, to generate income on a long-term basis.
So here again, let me try and emphasize and bring back the point which I raised. Today the interest rates are at 6 to 7%.
Correct.
We have seen higher rates also, and we have seen lower rates also. But this country has not seen a rate below 5% in general. Okay? Most of the Western world has seen 0 to 1% kind of rates, and for prolonged periods of time. So I am reiterating and repeating myself that to ensure that it is important to invest in some of those products which guarantee you assured rates of return for long periods of time. Now here we have got two categories of products. One category where you are guaranteed a rate of return for life. So you may live till the age of 90 years. I may live till the age of 95 years. Somebody may live beyond 100 years. It doesn't matter. So whether you're living for 90 or 95 or 100 years, it doesn't matter. Your income is guaranteed for life. And these are basically the annuity products. There you can, of course, invest in an immediate annuity product, or you can invest in a product like GPP Flexi, wherein you can put in a certain amount of money every year or on a monthly basis for a period of time, and you are getting a guaranteed income for your lifetime. And the beauty is that we are guaranteeing a rate of return not only on your current year's investment, we are also guaranteeing you a return on your future investments. Now this is something which no other industry can do.
True.
There is another kind of product that we offer. We offer you a guaranteed rate of return for a specified term. These are basically the gift series of products. And there are many within that. You have got gift lump sum, you have got gift pro, you have got gift long term, and then you have got gift select, which is the latest offering. Right? And all of these serve different kind of purposes. But basically, here what we are doing is, we are providing you life cover, which means if something happens to you, yet the benefits will accrue to the beneficiary. And at the same time, you can choose for how many years you want to have the assured rate of income. There we also have the provision that after your term is over, you can actually get back the principal. So let us say you have opted for 10 pay and then 30 stay after that, and you want the principal back. What it means is, first 10 years, you will continue to pay the premiums. In those 10 years, you are actually also getting a life cover. So it's a complete financial security for the family. After the 10 years have expired, and let us say from 11th year you've opted for income, so you will start getting the income and you will continue to get the income for the next 30 years. And let us say after 30 years, you continue to live, then you will get the principal amount back, which means whatever you invested in the first 10 years, you will get that entire thing back, which actually you can use beyond the age of 90 years.
So one gets income for 30 years and also gets all the principal amount back.
Right. Yeah. And then when I took those names of gift long-term, gift pro, these are all nomenclatures, but all of these have certain nuances. So a gift select is a product where we start offering incomes early. So even while you are paying, some people will want to have or see some incomes instantly.
Immediately, yeah.
So if one is looking for some instant gratification and also looking for financial security beyond retirement, then Gift Select is a good product.
Okay.
However, there are people who say that, look, right now I'm earning.
Correct.
I don't need any immediate income, but I would want a higher income later on. So then you will go for other gift products like Gift Long Term or Gift Pro. We also have features in these products, both in Gift Pro as well as in GPP Flexi, where you can opt for increasing income.
Okay.
So it is like, for example, my first year annuity or income is, let's say, 1 lakh per year. That 1 lakh per year can become, let's say, 1.05 lakhs the second year, then 1.1 lakhs in the third year, and so forth. So in a way, as you progress in time, the size of the annual income by way of either annuity or guaranteed income keeps going up. And it actually acts as a very good hedge against inflation.
I think it's so important, because I think we all have seen, in the beginning we also spoke about, like last 2 decades, right? Okay, how the inflation, has impacted, I would say, the roti kapda makan, of a lot of people. Yeah. So I think what we're saying is it's a good mix of solutions which offer growth, which offer protection, right? And it also offers flexibility for one to choose from.
Yes. Your wealth creation needs are met. Your income needs are met.
Correct.
In case there is any discontinuity whatsoever, then also we continue to take care of you. And the risk of inflation is also taken care of in case of increasing income products. And at the same time, if there is any risk of interest rates falling abnormally low, that also gets taken care of. So just imagine, there are so many variables in life.
True.
And probably a combination of maybe 2 or 3 solutions from ICICI Prudential Life can take care of all these eventualities.
So in a way, we can say it's truly a foolproof, plan for the future.
Absolutely.
It just covers every aspect, and every, variables, which can play out, in future.
These products have been designed and planned like that. So take care of all these important events that can happen in the life of any individual.
So Manish, when it comes to income phase, right, you spoke about the gift range of solutions, you spoke about the guaranteed, pension plan flexi, right? Other than these, are there any more solutions which the customers can explore?
So I spoke just now about gold pension savings. So just as we have gold pension savings, we also have one more product called gold, and it has an income variant, wherein when you invest with us in gold, what actually happens, there's a income which gets given out to you on an annual basis, and it is normally for a fixed tenure which you are choosing. So it's a very powerful product. It's a fantastic retirement planning tool, and just as we have got other products for different risk profiles, so people having moderate to low risk profile, if they want to invest in a long-term retirement product, I think this is one product they can look at.
And the income is like assured, guaranteed for 99 years.
So whatever we are declaring every year by way of bonus will get guaranteed and payable to them. That is the way it works.
Okay. So good. I think, again, from a customer's point of view, there are a mix of solutions, right? Yeah. And now it's up to the customer in terms of, depending on their needs, right? Their risk appetite, they can choose what fits in, their requirement.
Yes.
So Manish, thank you so much for coming today. It was an interesting conversation.
It was my pleasure as well.
Thank you. And I'm sure even the audience enjoyed this conversation, right? Well, coming to retirement, I'm sure, you all would have realized that how important it is to plan for retirement. So all it requires is start early, start planning actively, and I'm sure each one of you will have your dream retirement. So once again, thank you for joining us and wish you all a great life ahead. Thank you.